Well, it's very rare at Gresham in a symposium to have, I think, such a very clear distinction between two speakers. Normally, they always claim that the question was misphrased and really we're all in violent agreement. I don't think we're in violent disagreement. I think what we're tackling, though, is an extremely complex subject. You know, we start with globalization, which by definition means the globe, and then we're trying to pull it apart and put it back together again. So it's definitely very, very complicated. What I'd like to do, if I could, is give Nicolas just a minute to respond to Richard's point, and I do mean just a minute or two, and then Richard, likewise, any last points you'd like to make, and then I'd really like to throw it open to the audience, and Chloe has got a roving mic, and we'll get onto that in a moment. So Nicolas, just some quick thoughts.
Okay, I have so many points to respond to here that I don't know which one to start with.
Well, just pick one.
Okay, I'll pick one. Goodness. First of all, on the competition thing, it's as if Richard didn't listen to my presentation. I suspect there'll be a lot of people who will go away sort of thinking that's interesting and then back to the way they always were. But this is not competition. US states certainly compete with each other in offering, again, this word compete in inverted commas, but all the evidence shows that there's absolutely no economic benefits from this process. Public finances at 50% GDP, that's evidence that this process isn't biting. Absolute nonsense. The effect is on the distribution of the tax charge within tax systems. The graph I showed that it doesn't matter whether a country has 27% of GDP tax or 55% of GDP, you're going to grow at the same rate, whatever. Tax is a transfer, not a cost. That's one issue. If I only have 1 minute, then China as the biggest poverty reduction machine in world history. Yeah, quite possibly so. One small detail, China is a country that has probably more successfully than any other in recent history been practicing financial repression. And here we need to distinguish between, Richard Hay asked for our views on globalization. I make a very clear distinction between financial globalization and trade globalization. I think many people who would view trade globalization as a good thing do not necessarily regard financial globalization as such a good thing. China has been the most successful in bottling up financial globalization. Wide trade globalization, financial globalization much more tightly curbed, and it has been incredibly successful. One might also mention the era of the Bretton Woods curbs on financial globalization after the Second World War, the era of John Maynard Keynes and Harry Dexter White, when there was very strong efforts to curb flows of international capital under a recognition that willy-nilly financial liberalization leads to things such as the Great Depression. The period, the roughly quarter century following the Second World War, when there was this financial repression, is now known as the golden age of capitalism. That's when economies around the world are growing much faster than they are today.
Nicolas, we're stretching the period of 1 minute as well.
Was falling. All right, I have many other points, but
and Richard.
Well, I think I've had my say, but so I'll just make one point, and that is, I note your point about distribution, and I think what you're suggesting is that it should fall on corporations rather than individuals. Is that?
No,
on corporations.
It should be
give up corporate tax.
A tax system has many, many different parts. A corporate tax is an important and precious part of that. We need inheritance taxes, we need income taxes, we need within reason value-added taxes, we need all of these things. But this process of tax wars is killing the corporate tax, which is one of the most precious tax, among other things, because the more you drop corporate tax rates below the top personal income tax rates, the more people incorporate themselves as corporations and escape tax, and the more inequality rises. But there are many other reasons.
Just one point about corporations, which I know I'm sure Michael's well familiar with, is that taxes don't actually fall on corporations. They fall on shareholders, they fall on consumers, they fall on employees. I mean, corporate tax often looks like a freebie because you assume that, there's this institution that's bearing it, none of us steal it. It doesn't work like that. And the shareholders in corporations are not fat cats smoking cigars sitting behind desks, they're typically ordinary pension holders. They're us. So the suggestion that somehow corporate tax, affects a fundamentally different, hits a fundamentally different constituency, I'm not too sure about.
Okay. Well, I think both of our speakers have had their chance. Now it's yours. I'd like to take, if I could, 3 or 4 questions, and I don't really want statements, so make them questions that the panelists can get their teeth into. Please identify yourself and any affiliation you'd care to as you start. So if I could have a show of hands, those who'd like to comment, great. Good. Well, we'll start up here then, Chloe. Actually, we'll start back there. We've got one there. There. Okay.
Yes, sort of a question for Nicolas Shaxson. Firstly, I don't think, I'm going to make a point, I don't think as an economist it's really up to journalists like you to start following competition. It's really up to the economists to do that sort of thing.
Sorry, I didn't understand the question.
Well, the question is this. Having used ad hominem arguments, you dismissed Charles D. Booth as a joke. Where in the academic literature has he been knocked down? You dismissed the notion of national competitive advantage, first ordered by Michael Mainelli as a joke. Tell me where that's been knocked down.
Thank you. Gentleman here.
Hi, my name is Nigel White. A point which I think was briefly touched on by Nigel in his introduction and just skirted around in both your presentations but not really followed through, is that obviously, as you said right at the very end of your discussion, there are many forms of taxation. And I think a good tax is one which is A, not easily avoidable, and B, one which doesn't then lead to perverse incentives to do things which might have detrimental economic effects. Is there not a case of analysing what are actually the good taxes? And is it not so much about the argument about competition in tax rates, but competition in terms of what taxes are actually applied by different countries?
Thank you, Nigel.
Do you mean a kind of intellectual competition between the merits of different taxes? Is that what you're talking about? Okay.
Are the tax systems right? Is corporation tax bust as a system?
Okay.
Is it
Anybody else?
I have to be
Robert?
very careful to phrase this as a question, but Paul Shari, it does occur to me, and I wonder whether it's true, that there was not too much difference in what the two speakers were saying about matters of tax competition. Because is it not the case that if an existing multinational company is thinking of where to locate a new operation, it will look at a multitude of factors, tax being one, but mainly, I think, tax in the context of part of the stability. It doesn't, like, I would suggest, a country where changes in, every time there's an election, there's a wild swing between sort of almost communism and capitalism, such as we may have had in the UK at times. Is that not really the important point?
And
Robert Thorpe-Brown, reinsurer and international politician. Two quick things. Firstly, as is my reinsurance experience, Bermuda is built largely on the insurance industry. And one of the reasons for that is that the governments tend to take short-term want to take their tax on the short term. They do not understand that, for example, in the insurance industry, you have to take, you're doing long finance, you have to take a 10 or 20-year view. Yes, pay your tax, but only when you know that the cycle has passed, and therefore that the money has been able to accumulate to it. So therefore, that had a really beneficial effect on the London insurance market, and quite frankly, we had no need to export that if our regulators and if our tax authorities had operated sensibly. Secondly, I got very much involved in the Wild East, i.e. Russia, about 20 years ago. But offshore financial services, notably Cyprus, were extremely necessary. For example, if we tried to pay our staff properly, it wasn't a tax question at all. We paid them. Somebody in the bank would then tell the mafia who got money where there'd be taps on the door in the middle of the night. We were paying all our money into Cyprus and it was going back in cash. When our auditors told us we must not do this, I said, I'll stop this process provided you tell me that it's not happening in your office. They never came back.
Jakob.
I actually have a question for both of you. I think, and it actually it relates to what you asked, I think. The question is this: if a company chooses where to locate itself, what does it look at? It looks at the whole, the whole environment, and of course the tax environment is one of the environments. But it also looks at, do I have a workforce that is sufficiently qualified? Do I have a system, a legal system that makes sure that I can keep my profits and so forth? And tax is only one of those elements. So, and that's a question for you, Nicolas. You would you agree that to look at tax competition that way as part of the whole system would be something bad?
Okay.
It wasn't quite clear that.
You know, tax system would just be a good system in the sense that the tax cannot actually, what you said before, tax cannot be evaded, and it doesn't.
Right.
It produces as little bias as possible
Right,
on the
okay.
economy. And there I would say the question for Richard: if tax competition, in the way Nicolas said before, was just to offer some temporary tax break in order to attract some business and then let go again, would that be a good thing or not? Would you say that is a good thing? Would you agree with Nicolas that that is a bad thing or not?
Great. We'll pause there and let the two panelists get into it. And what I'll do, if I can, is can you wrap them all up together? So we've got academic, a question about the rapid dismissal of academics, the constitution of good taxes, stability in tax competition. Related to Jakob's point, is tax competition a legitimate factor? Not a good tax system, a legitimate factor for location. And then I think an excellent point, Robert, on how can we provide long-term tax stability for businesses trying to act in the long-term interest. So all excellent stuff. Nicolas, do you want to kick off on this, and I'll probably
I guess
switch it up later.
most of those questions were directed towards me. On the subject of academics, my statement was partly designed to be feisty, I guess, but I stand by very firmly these statements. To boot, the notion of tax competition between jurisdictions, it's based on some rather untenable assumptions, such as the fact that hordes of people flit from jurisdiction to jurisdiction, ripping their children out of schools at the drop of a tax inspector's hat. It assumes that tax havens don't exist, and a range of other assumptions. This is not the real world. Jurisdictions, the idea, just to explain what we're talking about here, the idea Charles Tooboot's paper, and this is not an ad hominem attack on him, this is an attack on the idea that is encapsulated by his paper. The idea is that jurisdictions are supposed to compete with each other. They offer a mix of tax and services to citizens, and citizens can then pick and choose the jurisdiction that they like. That's kind of the basic idea behind it. And it sounds kind of alluring. But if you look at the assumptions, people don't operate like that. People commute from one jurisdiction. They consume services in one place, pay taxes in another. Tax havens do exist. They don't tend to move jurisdictions when the tax rates change, no matter what some newspapers would have you believe. I mean, it does happen at the margin, but this is all marginal stuff. This is not meaningful competition. This is nothing to do with competition. This is a distraction. Porter's work on competitiveness, I think he's been quite careful to avoid saying that tax cuts will automatically make your economy. I believe he has not said that. We can discuss this later. On the subject of, Richard brought up the Oxford Centre Against Business Taxation, as I like to call it, because They are actually called the Oxford Centre for Business Taxation. I've actually got something here on my computer. There's an article in Accountancy Age a little while that looks at the origins of the Oxford Centre for Business Taxation. One of the driving forces behind it was someone called Christopher Wales. This is from Accountancy Age, which is a very reputable publication. This sums up Wales's mission to ensure a simple but fair taxation system that allows UK businesses to compete effectively and profitably in a global marketplace. The culmination of this mission, he says, was the creation and launch of the Oxford University Centre for Business Taxation. The centre has been set up with the goal of using academic weight alongside HM revenue and customs and business expertise and assistance to achieve a more competitive tax system for British businesses. Now, if you assume that, like motherhood and apple pie, a competitive tax system, in the sense that this is meant, is a good thing, then that would be a perfectly reasonable goal for this centre. But if you accept that this is contested terrain, this is not a neutral goal for an academic institution, then you will see that this is not a neutral institution. I'm sorry, it has got the name Oxford University behind it, and it has tremendous weight and respect, and Oxford University is a wonderful place. But on this particular issue, this particular centre, I would argue,
I'm conscious we're really not getting to anybody's
Okay.
point here.
Okay.
Richard, do you want to pick up, perhaps?
Sure.
Thanks.
On the subject of tax competition and changing incentives to attract people, whether they would flit around, as Nicolas puts it, I don't look at it that way. I mean, I take the point that people have jobs, houses, kids in school. When they introduce non-dom, enhanced taxation of non-doms in this country, the question I was not thinking about was, would people leave? But would people come? If you're already invested, you're going to stay. But in terms of the long-term impact of a policy like this, yes, it definitely makes a difference. If people think that tax system is unfavorable to individuals, or indeed even hostile, as it was at the end of the last government, it certainly does impact you. Jacob, as to your question about temporary tax breaks, what impact do they have? I know Nicolas has been very critical of that. I would share that view. I mean, I'm not a big fan of temporary tax breaks. They do say that one of the key problems with them is that it's hard for a government to target the areas to attract investors. And to put it another way, the governments can't pick the winners, but the companies sure can pick the governments. I don't regard these as particularly successful. I wouldn't endorse them. And if Nicolas's point is that countries should be discouraged from adopting these inducements, I really don't have any difficulty with that. To me, the critical question is, do you think that in talking about tax wars, there appears to be a suggestion there that other countries that want to have a tax system which is different from the United Kingdom or the United States shouldn't be permitted to do that. Now that is a proposition I would quarrel with. I mean, I think countries should be able to design their own tax systems. I don't tell my neighbor how to earn their money or how to spend it. And in the sovereign corporate context, I wouldn't expect countries to do that to each other either. But you didn't say that. But I would be interested in knowing whether within your constituency you think dampening tax competition means you can order other countries to flatter your commercial and economic interests by changing their tax system to reflect what you think is appropriate.
Countries also have the right to engage in currency wars as well, don't they? But first of all, that is not generally regarded as a beneficial thing either for the system as a whole, or for individual countries necessarily, because currency wars, you have winners and losers. You cut your currency, your exchange rate falls and your exporters benefit, and your importers, your consumers find it more difficult. So it's not a...
Are you saying that if a country has a low or no tax, direct tax system, they're declaring war on something? They're not permitted to do that? Or
this is a harmful process. Yes, it's not an overt declaration of war, but this is an unfriendly act. When a country deliberately targets the tax system of another country and saying, look, there's a loophole, let's go for that one, let's offer an alternative, offer an escape route.
It doesn't work like that. I mean, Jersey's tax system was put in by the Germans in 1943. You know, that's
It
how
has
they-
evolved since then, Richard.
It has but I mean, the low taxes there were you know, as I say, Germany put the rudiments, the basic tax system in place there. What you will find actually, Nicholas, I'm sure you've looked at this, but the smaller centers tend to rely a little more heavily on consumption taxes. And get back to the question about what's a good tax. I mean, I would say a good tax is one which doesn't discourage productive enterprise. I would put taxes on consumption, to maybe act as a break on that. The nice thing about a consumption tax is it feels voluntary. If you don't buy the good, you don't pay the tax. Now, I appreciate some goods are inelastic, so I don't want to push that one too hard, but at least to the consumer, you feel like you're incurring the incidence of taxation. If you look at Europe, you find the countries closest to the line, the center of Europe, tend to have pretty high tax systems. Those on the periphery, Portugal, Madeira, Ireland. Same thing happens on the other side of the Atlantic. The countries that on the periphery of the United States tend to have lower tax systems. It's harder to attract economic activity. I would take the view that it's a blend of all of these things that impact on
Could we just trying to get some of the audience in here too, gentlemen. I've got a chap there, just there, one up here and one here. I'll just take these three quickly, so we have a little bit more audience before we break. So over to you.
It's a very simple question, like what we've just been talking about. Surely sovereign states have the right to determine what their own tax codes are. The alternative to that is that we have some kind of global system of minimum tax rates. On what basis can it be justified? Surely if a sovereign state is a sovereign state, then it has the right to determine its own taxes.
Great. And we have a gentleman up here.
Regarding both taxation and also being a financial hub, what are your thoughts regarding the Middle East over the coming years, particularly with sort of the movement of Dubai as like a trade, import, tourism, taxation sort of haven, where they looked at both, we would have offshore advantage, but you actually had a substantial investment in the country and a local partner, and now that in the recent years with Ras Al Khaimah have taken the route of offshore type of companies. What are your thoughts on that, and what do you think the larger economies such as the USA, UK, etc., will take towards them?
Thank you. I've only got time for two more. Lady there, and then the gentleman at the back, I'm afraid. But we have another panel.
It's been very interesting. I personally have known many moving their money around the globe for the best advantages and not to pay full tax. With disclosure now and transparency, is this really coming to an end?
Okay, and way at the back. I'll pick you up after the break.
Would you like to comment about Italy? Italy is sort of seems to be on a permanent decline, very low growth and lots of government changes, many of them not elected governments. But still, the quality of life is still there. And a recent report said it was semi-retired. So how does that country still exist as a viable country?
I'll pick up with you later about home. Anyway, let's take it again. Richard, why don't you kick off this time? And gentlemen, we really only have about 3 minutes. So.
Okay, I'm going to let you go first, Nick, because I think most of it.
Okay, on this issue of sovereign states that have the right to determine their own tax systems. I mean, this is the argument that used by Switzerland about its secrecy for so long. We have the sovereign right to set our own secrecy laws. Yeah, sure you do, but other countries that are the victims of those secrecy laws have the right to take aggressive countermeasures. And the same thing with taxes. Small jurisdictions do have the right to set their own tax systems, of course they do. But other countries have the right to take defensive countermeasures when those tax systems start undermining their tax systems. The international movement of capital, and all these global transparency initiatives, is it all coming to an end? I mean, there are some people who take the view that this is like a balloon. You squeeze it in one end and it all comes out somewhere else. But the point about a balloon is that the volume remains the same when you do that. I think what's happening now is that you are seeing, this will still be a part, the changes that are coming will not be fully global. You will see some displacement, but I think it'll be more like a sponge. You will see some relocation to other places. They will tend to be more exotic locations. People will not be quite so comfortable with those. The tax authorities will get some of it and they'll lose some of it. Over to Richard.
Okay. I found your question about, what happens when we have full disclosure. Does money stop moving cross-border? I think, the reason why people invest cross-border is perceived to be to gain tax advantage, but they're real economic drivers. As Nick pointed out, people don't make investments, in order to attract the lowest tax rates. How many people got these email solicitations from African countries inviting you to invest money? And there would be great returns, there'd be no tax, there was full secrecy. And now, how many people actually sent the money in response to that? People are not that stupid. They don't send their money in response to these blandishments. And as far as I'm concerned, a level playing field on disclosure, I made the point in my remarks, bring it on. I think you'll find that the damage to the smaller centers, they suffer a lot from the demagoguery from politicians, etc., in the press, but are their standards actually lower? Can they sustain higher standards in the world? Definitely.
Well, folks, we're going to take a 10 or 15-minute break. I would like to say how nice it's been to have two people who've got opposing views be so gentlemanly about it. I think that's great. And particularly Nicolas, who flew in from Berlin this morning as Jakob trained in from Europe. I feel I have to have my toughens when somebody says that I'm economically illiterate. And then goes on to recommend that I ask people their opinions, which is actually what the survey does. I hasten to add, it asks people their opinions. It's very clear in our surveys that what people are interested in is the tax system. They're not necessarily interested in corporate tax rates or anything. They're very interested in the entirety of the system. And in fact, in deeper discussions on relocation, what I constantly find actually is a statistic that Richard focused on, which is the percentage of GDP which is dominated by the country. And they find that actually probably the most interesting bit. If you have a temporary tax break or something, that's all sweet, but you're going to get it out of me anyway. It'll come out of VAT, it'll come out of alcohol taxes, it'll come out of petrol taxes, it'll come out of import taxes. I don't care where it comes out of, I just want to know that, and most businesses look at it that way. And that has deep experience. And I'd leave all of you to mull something over, which I found very interesting, the point particularly about Africa, but in a different sense. Just after the war, Hong Kong, which interestingly had effectively a 0% corporation tax rate, was slightly poorer than Kenya and Tanzania. And in 1997, when it left the UK's dominion, the average GDP was wealthier. Interesting. Anyway, and that was before the rise of China to make it actually an offshore center. So and a lot to think about during the break, but if I could prevail upon you, I know we've run over by about 2 minutes, but if you can make it quick, please get back to your seats, please, for 4:15, because we've got some absolutely excellent panelists. Thank you.